they have to impart onto everyone here. So without further ado, Jessica and Farid. Hi.
Hello, guys.
So, Jessica, you mentioned I have like associate partner here, but is that the latest title? Okay, so Jessica is associate partner. Is your mic working?
I think so. You guys
Yeah,
can
yeah, yeah. Jessica is associate partner at K5 Global, and Farid is strategic advisor at Quintuple Aim Solutions
And managing partner at Chest Capital.
and managing partner at Chess Capital. So you both have a lot of experience. I think, Jessica, if you start by introducing yourself.
Yeah. So I took a circuitous path to venture, and I started my career in the Peace Corps and lived in Central America for a few years. Best career decision I ever made. I'm a Bay Area native. I'm from Oakland, so I see a little Oakland native over there. So the shirt's representing today. I went to business school and policy school, worked as a consultant, was at Waymo for a few years, so happy to talk self-driving. I'm a big promoter and supporter and very proud of what Waymo has accomplished. And then over a year and a half ago, joined a venture fund. We're split between here and Los Angeles called K5. And we have primarily our investments are in B2B SaaS. And I spend most of my time in vertical SaaS. And then we also incubate companies very opportunistically, which you might see as a trend in some venture funds today. Happy to chat about that a little bit more. And thank you all for being here and spending part of your Saturday with us. I really appreciate it.
All right. Hey, guys. I'm Farid. A little bit. So I was born in Iran, then Canada, then France, then US. So I've been all around. My background is I founded a few companies, exits. And then a few years ago, after my last company got acquired, we started a venture fund called Chess Capital with the focus primarily on healthcare. I'm here to see if we can talk about the experiences and what not to do.
All right. Well, it's great to see so many faces of young founders and entrepreneurs and aspiring entrepreneurs and things like that. I know that the topic is about 2024 and sort of looking forward. Jumping straight into it, do you have any thoughts about the fundraising climate in 2024 and how it's different from last year or previous years in general?
I think everything is stage dependent, and we can stick to the earlier stages. So I think what we saw in 2020 through the first half of 2022 is a lot of market exuberance. Everyone knows this. And since then, that market exuberance has toned down quite a bit. I think at the earlier stages, you haven't seen such a drop off in that fundraising environment, and startups continue to raise. And we're continuing to see that same velocity. I would say 2024, we're seeing more of a pickup in Q1, even at those earlier stages. We also have a growth fund, so growth is continuing to pick up. We saw that kind of in the second half of last year as well. Sorry, I'm going to speak louder. Hope that helps. What we also see is, as I've talked about, kind of that continuity is breaking back down to sobriety and great fundamentals. And I'm sure that isn't a surprise to anyone in this room, but there is more time to make decisions for both founders and funders on the venture side. And what that gets back to is great fundamentals, founders who are really focused on finding that problem, and are not just tackling growth, but really tackling every aspect of the business, which is also your path to.
Thing to actually get an introduction to a VC is not from a cold kind of an email. Those things, even if you get a meeting and some of them actually convert, it matters how you are connected to the VC. So if you have a somebody that they already had invested in, and that person knows you and knows your product, that's one of the best ways to actually get introduced. At the same time, the product itself matters. The product has to be fundable, and you should be able to show traction. And now I'm sure we will talk about what this means later on. But if you actually have a product that can show to a trusted VC, so these two together, then you are in a good position. So to get to a trusted VC, you need some sort of a connection that is not a cold connection. Sure, in setups like this sometimes work, but the best ones are warm introductions from people that they already invested in, or actually from other VCs. Not that great, because usually when a VC transfers you to another VC, that means they didn't invest, unless they are not really, that's not their field, and that's why they made the introduction. Those don't work either. So it kind of matters as to how you're actually positioning this.
I think founding is a series of well-made matches. It's a well-made match with your co-founder. Hopefully, I think co-founding relationships, they are so important, but hopefully many of you are considering a co-founder. It adds so much to the journey, your ideas, your ability to execute, your ability to split a very heavy load. That also, the match matters with the VC, the match matters with your customers, the match matters with every hire you make after that. It's just continuity. And so coming back to who your funders are, and there will be a series of funders in each round after round, there's not one path. So there's not just these one, set of VCs. There are a series of really strong angels out there, angel networks, incubators, and I would just open one's eyes to the many possibilities, and if that is a match. So certain VCs are really great at certain things, at certain stages, certain sectors. Find that mutual fit and that mutual match. Ask for intros. I intro companies that we can't invest in all the time because we're not focused in consumer. I know the check size might not fit. We aren't ready to move that quickly because our partner who really likes this thing is in Japan for 2 weeks. True story this week. I've seen great deals and I pass them on. And so also don't take, I also see deals that I don't pass on. And so if you get one intro and people are putting your name forward and saying, talk to this person, that's a great path and a great outcome. And you're always kind of trying to find this mutual fit. And so finding angel networks or angels who know how to continue to push you forward at that pre-seed, when you're beginning to bring in institutions, there's many questions that you can ask as you're finding that mutual fit for what you need and what they need as well.
So Farid, I know you touched upon it a couple of times, the product question, which is super important, obviously. What is it that you as a VC and you too, Jessica, are looking for in terms of the product? What is it that would make something investable into or interesting?
Yeah, that's the greatest question, especially when you are early on. How you actually determine that the product is fundable, it has some potential to actually be successful. So at least for my own fund, and that the way we are doing it is there are two distinct category of products that we are actually funding. And again, keep in mind, this is healthcare only and biotech mostly. We do fund software companies too, but not as much as maybe Jessica. So the way we are doing it is you either have something that is a product that is made, or you're in the middle of some research, and you could actually show that there is traction. By traction, I mean, if it's a software thing, you actually have people that are coming back to use it. You may not have too many users, and that's totally fine. But the ones that you have really like something about your product, it may not be the whole thing. Some parts of your product may be broken, doesn't matter. But if you have a buggy product and people are still making an effort to come use it, that's great. That's you need to show that, which basically means, especially for software products, you have to have analytics actually built in. I've seen so many companies that they have something and like they can't show if their product is being used or not, how often is being used, and that is the worst thing. Yeah, you have to build analytics from the get-go, and you have to know what to measure. It's not usually the VC's job to tell you what to measure, even though we do sometimes. But you have to figure out some metrics that when you are measuring, you can justify that this thing shows that my product is being used. So that's category of a product that is you have something. And then the second category that we personally invest in are pure research out of universities. So those ones are a little bit different, especially when you go to stem cell. Those things are a little bit harder to kind of have some could decide if it's a good product or not. But usually the way we do it is we have some partnerships in some schools, mostly in Europe and Israel. And I know VCs, some of them actually do it here. There is a fund that is only doing, for example, MIT projects. And if you are in MIT, that's the fund to go to. There's a bunch of funds that are doing school-specific funds. So those ones, they usually have some sort of a supervisor, say some partnerships that are early on. So some research are funded by an organization or private or public that once there was an actual reason that this got funded because it solves a real problem. So that those are good indications for projects that are pure like research and not software related. So those ones are a little bit tricky, but I would imagine because we are in San Francisco, that's not really most of what you guys do. But if it is, I'll be more than happy to talk more about it.
Do you have anything to add to that?
I think as you're all sitting here, you all are likely here because you saw a problem that you didn't feel was being solved. Something was not being met in the market. And distilling what that problem is, and then distilling what your approach to solving that problem is really key to what we look for. And one's ability to state that clearly and also state the kind of different thinking, different approach, different execute, different insight that you are all bringing as founders to that problem is what we really look for. And then we also look for kind of team's ability to execute against that. We look at how big is the market. I always press on what is the founder's understanding in that market, how they will stay differentiated as well, and a plan to stay differentiated. And you won't always have that figured out from day one, but there is an expectation that you have a thought process about how you will figure that out. And being able to explain that is also really important as well.
Okay, so moving forward, and let's say that those steps are taken into account. The founders have built a product that really has this captive audience, and they've found they've gotten a warm introduction to the relevant VCs and all that. Do you have any practical advice that you would like to give to somebody who's going to be pitching to a VC? Anything in particular that you see founders sort of trip on or anything like that?
When you're pitching, especially, that's something that I really see is don't be too defensive. Hear them out. And a lot of times, these are real world situations that don't see it as they are missing this information and all that, but see it as when you're running a company, this situation will keep happening, not with VCs only, within your own company. You actually have to deal with let's call it stupid questions. So don't be defensive. Don't go back and say, oh, but you don't know. Like, understand that first of all, there might be something in that question that you just haven't looked at, or don't have the experience, or haven't seen it in a while, or something that actually might not be the best question. But uh, how to maneuver that question and not sound defensive is actually a skill that you would need in running your company. But that's one of the top just came to my mind.
Yeah, I think about that one. There are no stupid questions, but a C or a customer or someone that you're trying to recruit to your startup, or treat them as users, and you need to understand their journey. So depending on what customer you're talking to, you need to tailor the message of your company to, we assume you have this problem. Does that resonate? Listen to them. Here's what we offer. Listen to what they're saying. And continue to tailor your message there. Same with VCs. We might ask basic questions. We might ask questions that, well, isn't your product similar to this? And you might be like, no. But you can say, like, what a great question. Let me explain. So I am definitely guilty of correlating like two markets that are unclear, but how founders respond can be really helpful, I think, to your point. So your user journeys are so useful to so many parts of life, and being able to articulate that to every different audience that you have is really quite a skill that I think we're all honing over time, of how do we best communicate who we are, what is our value, in any walk of life.
So I'm just wondering, like, I'm assuming a lot of the people here, or pretty much everybody here, has been bootstrapping their product or their idea up until now. And wanted to hear your thoughts on when is the right time to stop bootstrapping and to start looking for additional funding to know basically what's the time that you do that? How much should you invest in the bootstrapping phase?
Difficult question. I actually, for my own company, let me just tell you the story of what happened to my own company, the last company that I did myself. I did a company that was basically One Medical for dental, right? So at the time that I was doing it, and it was growing really fast, and I didn't need money, so I bootstrapped it myself to get to a bigger round. We got to a lot of revenue within a year and a half, which is, by any measure, that was a good time to actually go. We got to around $12 million annual revenue. So in just a year and a half. So by any measure, that would be a good time to go raise. But now, at the same time, One Medical wasn't doing that hot. So, and when you would talk to VCs at the time, they were saying, nah, no. So that a thing that in any other time would have been so hot. Well, obviously, if I dropped the valuation, they would have come in, but I wouldn't do that. So a thing that at any other time would have been so exciting, it turned into, now I had to bootstrap it to the next level, to the next round, and which turned out to be a good idea that I did it that way. But at the time, it felt so terrible. But all I'm saying is, it depends. It depends on the market. It depends on how, if can you continue. But what I suggest in general, which doesn't always apply, but this is this is like capitalism. That we don't have anything better for this. It's just it's just better than the next bad thing. Time box it. Just when you're starting in your own head, just imagine, hey, this is how much time I'm gonna actually spend on this thing, and put some goals and the goal should not be to raise money. This is a terrible goal. The goal should be to get to some product milestone in terms of I'm gonna have this much traction, I'm gonna have this many users, something like this, and then say I'm gonna get to this by this time. Do not put the on the, like, I raise, that's a really bad goal. I can't emphasize enough. But if you have a goal and have a time limit to get to that goal, that's the best way of managing as to, am I going to continue on this, and I'm going to just switch to something else.
The goal orientation really resonates. In terms of bootstrap, so I recognize that, and that's really an important message to share. Is some folks, need to go from a job immediately to finding the time to go fundraise and step into that. So I will start there. I think what we look for is full-time founders, and it's great to begin to talk to people who are full-time founders or about to be full-time founders, because in their nights and weekends, they've been bootstrapping or thinking or working on an idea and are ready to go. But it's about this readiness for full-time. And I think that can come with, we have a fundraising moment. With this fundraising, we have a goal, and that goal orientation, or we meet founders who've been bootstrapping for a while because of whatever kind of situation they have in their life that allows for that. And that can be a really great thing to see, because in both circumstances, we really want full-time founders who have enough knowledge about what they're hitting with their product milestones, not with their fundraising milestones, as the first thing that they're working towards. And here's why they're coming to you at this moment.
Yeah, so I think one of the things you just touched upon is full-time founders. And when we talked last, you mentioned the importance of sort of having a team and a co-founder and all that. That's really all like having everybody behind the same goal. And I wanted to know, I know a lot of people might be looking for co-founders or something like that. And you had some thoughts on that. And Farid, and Jessica, I wanted to ask you what you thought about those.
Jessica mentioned at the beginning, you definitely need a co-founder. Even if you look at the stats of successful companies, successful startups, the number of single founder startups that have been successful is so low, and that kind of shows a risk to VCs. Like, I'm not saying it never happens. No, it does, but it's a statistical kind of a business. The percentage of single founder companies that are successful is so low. So it's very important to have a founder. Now, again, this is a little bit my personal opinion on this, and I'll be curious to hear what Jessica thinks. But the best type of co-founders that I actually have seen have known each other for a while. They don't go to find a co-founder for the purpose of finding a co-founder. What what I've seen happening that works really well is that you have an idea, or you might be technical, you may not be technical. Oh, by the way, one of you has to be technical. That just should happen. It's possible that both of you are technical, but one of you should be able to easily sell. So the idea is one of you should be able to focus on selling, the other one on building. That's kind of the idea. But there are variations that you could actually complement to your each other's skills. But go to your friends that have this missing skill and try to convince them to join your startup. If you can't, that's a bad sign. So that basically means, as Jessica mentioned in the beginning, that treat that person, co-founder, as a user. So if your idea is not interesting enough for your own friend to join your company, you may want to kind of either change the way you pitch it, or change your product. Because if you can't convince your own friend, later on, how can you convince a VC? So that's how I look at it. And like random meetups, I'm sure it has worked, and it does work sometimes, but I have not seen one.
Yeah, I think this is a no silver bullet answer. But I also agree, co-founders are incredibly important, just because this is a long, challenging journey. And so being in it with someone really matters. With that, it's a long, challenging journey. Being in it with someone who is a good fit mutually, again, going back to that, really matters. And so if you've known someone for a long time, if you're just meeting someone and you're considering that co-founding relationship, what I like to suggest, and this is advice I do not always take, but go step away, remove your phone, remove the distractions, just bring a notebook, and think about like, what are the questions you want to know about that person, and try and come back and answer those questions. And having those honest conversations early, like the going will get hard. So try and really be able to have, ask yourself the hard questions about what it's like to work with you, what it's like to likely work with them, and go have that dialogue. And I think that's true for people you've known for a long time. Like some of my best friends, I wouldn't want to be roommates with them. We learned that in college, sort of thing. And I think it's very true. Like some of your great friends might not be a great co-founder, and you need to go into that eyes wide open.
Yeah, and I think people need to understand the sort of startup journey that's pretty difficult and not particularly pleasant in many ways. And I'm sure you both have experiences in either seeing other people sort of hit those hard times, or yourself had those. Basically, what would you say is, I know Farid, you're kind of a serial founder. What would you say your main takeaway from those experiences are?
Don't do it for the money. It's just a bad idea. Almost always you would make more money going to work with a company that is a big company or more established startup. Only do it because you love it. It sounds cliche. I know, I realize it does, but it is true. It's a lonely life. It's up and down. You have to love the chaos. And you have to be able to put a smile on your face throughout the chaos, because it's your problem. It's not other, especially when you actually raise money or you have people that are working with you for your company. If something is going wrong in the back, you can't raise, or whatever is happening in the background, it's for you. It's not for anybody else. You have to put a smile on your face. You have to actually pretend everything is good, or it will be bad. So, and you have to love it. Otherwise, it would be tough. If every time that this happens to you, you're just gonna, go and just cry, which, yeah, that's fine too. I've done it. But even the crying thing, if you're not enjoying that, because that will happen a lot. Whoever says that they're like, no, everything is rosy, that's just not. So you have to like it. And do not do it for money. So that's the main takeaways. Like I found the 3 companies that says a lot about me being crazy.
I think that sums it up well. And I think when you think it's your point on it's a lonely life, often for the founder, you will be grappling with all of these issues on the team, on the product, with the customers, with your funders, when the cash flow is coming in, and you have to solve it yourself. And there's I see this we're a small fund. And so when there are big challenges, there's a very small group of people to go to. When you're a founder, there's really no one who shares all of the context that you have on all of the issues and these trade-offs that you have to make. And so you're really grappling with them alone. I will say events like this, communities like this, are a way to meet others who have solved a similar problem and like share and be open about that. No one has all the answers, but someone else has grappled with something similarly. So I do really encourage that as well in any kind of type of work you're doing, be it a founder or something else. Someone else has solved it and has some learnings for you.
Yeah, I think the sort of the passion and making sure that people have something they're really working towards. And I think what you're saying is fundraising is not the goal. It should never be. And the product should always be the main goal. It should resolve or solve an actual real world problem rather than anything else. I'm just really thinking about we've talked about the journey that you went through. Very very briefly, we touched upon it. Um, what would you say? I guess it's very common for startups to have that make or break moment where they get so close to the precipice where they're like just staring down at nothing and they're just about to sort of jump. Uh, what would you say was your experience with that, and how did you sort of deal with it and sort of build the mental sort of strength to go through it? No, to basically sort of prepare yourself for the difficulties of the startup journey. Were you able to prepare yourself, or did you just go into it and then not think about it?
Not knowing what you don't know is actually a blessing. So, for a lot of people, and I know a lot of my friends that have done startup, that's how they got into it. If you know what you're getting into, you're more likely not won't get into it. And that's why we're like a lot of good startups are coming from people that don't really have experience in that particular area. Because, like, especially, like, for example, me, when I did the dentistry thing, and my background is not dentistry at all. So everybody that was in dentistry was saying, but are you crazy, dude? Like, do you know how much like regulation is here? How much my only connection to dentistry was that my girlfriend was a dentist. So, so the ignorance is a blessing in that case a little bit. But I got into it, and that was my second company. So I knew that there was a thing that was happening a long time ago. My first company that I did years ago, I did it out of not actually knowing, and I made a lot of mistakes. It still worked ish, but it worked enough that kind of gave me this thing as to, hey, the joy of making something that doesn't exist, the joy of seeing people using that product. If you see the joy and you just say, oh, everything that I went through that was hell, totally worth it, then you're a founder. If you don't have that joy, it's not there. That's kind of what happened to me.
I love that. I just to echo what you said. I think we started with, you're all here because we assume there's a problem that you want to solve, and you think the status quo is unacceptable, and you're willing to do like some of the things you mentioned to go fix that and change that. It's a journey, and so thank you all for kind of contemplating pushing those boundaries as well.
Yeah. So on a related note, from a VC's perspective, and just moving ahead in the whole startup journey, what are some of the sort of, I guess, the very common and earliest issues that you see startups running into after they've raised a round, either seed or, well, I guess seed. After they've raised a round, what are the first sort of hurdles that they'll encounter?
Hiring the right people. That by far always, at least for the ones that I've seen, is the biggest thing. Hiring the right people. Now, what I'm about to say is controversial, depending on who you ask. My way of hiring is try your best to hire the best you can, but fire fast. So if you see somebody is not working, don't try to find the ideal one with like a unicorn that you think is the best fit. Sure, I'm not saying hire anybody off the street just randomly. But I'm saying don't look for a 99% match of what your ideal candidate would look like, because first of all, you could be wrong. That may not be the thing that you actually want, and yeah, waiting that long may never pay off. So hire as fast. Maybe if there is the 75% match of the thing that is in your head, just hire. But if you see after like a few months that person is not working out for whatever reason, first of all, be realistic. It shouldn't be just you just randomly don't get rid of people. That's a bad idea too. But if give them time, give them feedback to kind of correct, and you should also understand. But if it is taking too long and you can't make it work, let them go because it's a better thing for them. Uh, you don't want people to actually be in an environment that they are not the best contributor, because it actually for them is a bad thing to mentally. So you are doing yourself and them a favor by actually having them part ways as early as you detect that's not a good match. That's kind of the advice that I give to companies that I invest in, as well as when I do it myself in my own companies.
Yeah, agree. Talent matters so much. And I think the other thing I would say is when you're thinking about that problem, those early user journeys, stay with that user journey and getting that feedback. I think another thing I see is folks who said they did all of their discovery and they got it, they understand it, and then they're just building. And if you are leaving that behind and not keeping it up to date, that is a really big problem. And founders are busy. You're selling, you're raising, all of those things. You're hiring, I think, more than anything. But you have to stay close to that customer and understand what that North Star looks like.
So, yeah, thanks. Just shifting gears a little bit, I wanted to ask you about things that have surprised you as VCs in terms of companies that you thought were going to be successful but ended up sort of fizzling, and sort of likewise companies that you didn't think were going to be successful but just exploded.
I have so many examples of the second one. So many. On the first, so you miss, like, there are a lot of things, and at the end of the day, it's you take, as a VC, you take some risk on some areas that for either your firm kind of cares about, or you personally care about, or it's a combination of both, and you miss some stuff. And then also, based on the same kind of metrics that you go, you decide something is a good investment, but VC is, there is a big risk. Out of many companies that you invest in, a lot of them don't work. The reason that I've seen the ones that I invested in haven't worked, the majority of them, is that the team didn't stay that work well together. At least that was one of the main reasons, that the people, for some reason, they kind of didn't work. Now it could be I don't know. They just decided that they don't like each other, or a lot of other reasons. But the team actually not working out well was at the top of my list. And then actually what Jessica said, they keep their eye off of the thing that they talked about when they raised the money. They said, oh, but there is this thing here that I think is better. Let's just move to that thing. And that actually is usually not the right move.
Yeah, I think a lot of examples both ways. Timing matters, and execution matters as well. I think what we're seeing more and more is sobriety on spend, and it's really up to founders to chart that path. To who can I hire? How long do I have? What is the revenue I need to garner? And staying ahead of that. But team and proximity to that problem really matters.
Thank you. One question that's probably on a lot of people's minds is accelerators. We've got a lot of accelerators in the Bay Area. What are your thoughts on those?
It's polarized. So good ones are really good, bad ones are really bad. Basically, see if whatever the accelerator is hiring is aligned with what you have in mind. Good accelerators usually, but there are even exceptions to this, but generally accelerators give value to you for free. They usually don't charge you for things, for intangible things, and like a lot of good. Basically, the best advice is always free advice. It's if you're paying for it. Again, there are exceptions, But in general, that's how I see it. So accelerators, that I see it as from the get-go, they want to kind of squeeze you and get the money that you don't have out of you. It's tough to kind of justify it, and there is a lot of them in Bay Area, but there are also a lot of good ones in Bay Area. So I see it two extremes, either really good or really bad.
Yeah, my quick thought is talk to other people, their experience. Did that accelerator add value? Do your homework. I'm sure there's lots of Reddit boards. There's other boards. Like do your research. Be mindful of the percentage of equity that is exchanged, and be mindful of what you as a founder get out of it and that value, and then go double check that your assumption is correct based on what other people say about their own experiences.
All right. So final question, and then we'll have a quick Q&A session. I wanted to ask you both, what would you think is the sort of like the top advice, like the one thing that you wish like founders knew before they went and pitched to a VC or something like that? What is the top of mind thing that you're thinking about?
The goal is not to raise money. The goal is to build a good product. You shouldn't see the VC as, hey, this is if I get the money, then everything is solved. No, actually, if you get the money, then the things start. So, and if you have that in mind, it actually kind of comes off when you're talking to the VC. There are signs that you actually are looking at it as to, hey, that money is not for you. That money is for building the thing that you said you would build. So if you have that mentality, it actually comes off when you're talking to a VC. Do not have that in mind. It's not about raising fund. It's about building a product that people love.
Yeah, I think to echo that, and you can treat it as a conversation. It's a user who hopefully knows a lot about your market, knows some customers, and knows other funders and founders in the space. And you might be fundraising, and that might be a match there. But if you treat it as a conversation of what you're excited about building and why you're there, often it can open up what that conversation is. If I know someone who could be great for a role you're hiring for, or I know another fund who is really good at this stuff and will immediately introduce you to a potential customer. So those things happen. And it kind of all goes back to your fundamental, which is build a great product, because you got to stick with it for a long time. You really have to love it. And you have to also, when you pivot, and if you pivot away from something, be open to that change as well.
All right. Well, thank you very much for the great information. I think we're going to open up to questions if anybody has some questions for the panelists. Yeah, so we'll start with you. Let me pass you the microphone.
Thank you, Jessica and Farid. Farid, I have two questions for you. First, can you be my mentor? Yes. Second one, the toughest question that I face so far when I meet with the investors is, what is your exit strategy, right? And if you tell that I want to go for an IPO, and some people think, oh, you are not confident enough to make quick money. Or if I say that we want to be acquired or we want to sell in a couple of years, then some people would think of, oh, you don't love it long enough. I mean, so it's kind of a dicey area for we are bootstrapping and we have been in revenues. But this is the question where I want to pick your brain and see what would you suggest?
Don't think about it.
Yeah.
Don't think about it. Build the thing that people love. Exit, and VCs. If some VCs and a lot of the good ones actually may ask you as to what do you think the exit strategy. That's not the reason they're asking you. They just want to hear how you think about things. It's not like nobody's going to tie you down to, hey, oh, I want to. So don't say it as if that's your exit strategy. Say it as to show that you thought about this way or that way, and don't think about it as to, hey, what you're actually heading to, because that's actually the wrong mentality. You're not making the product to exit. You're making a product because you love it and you think customers will love it. Exit will come.
Any other?
Oops. I am currently struggling with the full-time founder question. Nights and weekends, that's what we're doing. But even with accelerators, they're like, oh, you're not working on it full-time. You must not love it enough. No, we have a mortgage. Like
Yeah.
that, it's becoming like a big barrier to entry. And I guess, what are your recommendations? I'm not raising money to raise money. I'm raising money because we're getting to the point in product milestones where we need it. We're still hitting product milestones, still hitting go-to-market milestones, but it would make it happen faster. And I guess it's becoming like they're not even listening to that. It's just like, well, you're not working out full time, so you must not care. And that's, I don't know. I'm not from money. I'm not. It's a problem. So what do you recommend?
I think that makes a lot of sense. And as we talked about, not everyone has the opportunity to go bootstrap full time. And I am challenged with nights and weekends work. So if I had a side project, I think I am not good at kind of closing my day, whatever my day job is, and then going to go do that. I think other people are quite impressive at doing that. And as we were discussing, if you have those milestones that you are hitting internally to go be ready for a fundraise to step into that full time, that's what we look for is if you have all of the product conviction ready to go to raise and you are successful in a fundraise, would that allow you to step into this full time? And kind of asking the question, what is needed for me to take this on full time? Can I spend my nights and weekends? It sounds like you might have a team or someone else you're working with to go do that and step into that. Or is that not feasible for me right now based on where the product is? We can't raise against it. And I actually need to keep pushing this on nights and weekends. And so it's a bit of kind of what you need in your life and how ready are you to go make that fundraise happen so it can become a full-time thing.
I guess what I'm finding is even that answer, like if we had the money, we would be in it full time. It hasn't been like sufficient at this point, which has been really interesting for me.
I would reframe as understanding what you need to get to a fundraise. How far away are you from that fundraise? And then you repitch as, we are here fundraising, which will allow us to meet these milestones. And if you are successful in doing that, you are then able to go full time. So you're saying we're actually meeting the moment because now is the time where we're ready to step in full time. And you'll hear back from the market, but you need to be ready for that moment of, we're fundraising, here is the amount we're fundraising, here are the milestones it gets us, and it does allow me to live in this very expensive place that we live if you're based here. And that's how I would reframe it, is like, are we ready as a company and idea to go make this a full-time thing?
Okay. Yep.
How you doing, Jessica and Farid? I love your responses, Farid. So my question is more when speaking to an investor. So what do you view as most important when speaking to an investor? Is it more important to speak on what the product is now or your future ideas for the product? So for instance, like if I'm pitching Instagram, do I go up and say, hey, I have an image for an app that people can go and like pictures? Or do I come and say, hey, I have these amazing ideas. One day people are going to be able to speak over video. One day people are going to be. So like, which way do you think would be better to approach that?
Tell them what the product is and tell them and show them that the few users that you have already love it. Show it to them that you should educate them as to, this is the current product. You can touch upon what you have in mind for the future, sure, but you should actually talk about what you have as well as show the proof that it works. Not it works in terms of it doesn't have bugs. No, no. It works as in people who are already on your product, or they love something about your product, and you should be able to show it with numbers. So that back to the thing as make sure there is analytics in your product, and you know what you are measuring and why you are measuring it. Don't randomly just measure things. Like DAO may not mean much for a product that, MAU might mean something. It depends on your product. So it's not the VC's job to find out what to measure to show it's good. If you actually don't show that, you miss the mark.
Okay, so like, let's say like we take it to sports terms, and there's someone who averages 2 points, but he's playing 5 minutes a game. So like, how do you go to the coach and say, hey, I'm averaging 2 points. If you give me 20 minutes, 30 minutes, I could average this amount of points. And like, let's say the coach being a VC, what could you say to make that person be like, oh,
so back so it's a good question. So let's say you're playing this length of time, and your average is this much, right? So you say, hey, I average 1 point every 5 minutes, just a random number, right? But an average player on the market averages 1 point every 35 minutes. So see, now you thought about what to tell them, and this is like off the cuff kind of a thing. Figure out what to measure and what is meaningful to measure to show your product is good. It's very case dependent. There is no silver bullet.
but what I'm really trying to get to is like, I think sometimes it's hard when you have like what you were saying about fundraising, when you have like a small amount of money and you can only showcase like a small bearing of what your application is doing, to go to an investor and ask them to invest like what you need or what you believe that could accelerate your product. It's like, sometimes it's a reach, because it's like most people want like solidarity. Most people want like something that they know is going to come through.
Yeah, that's why startups are hard. I don't have a good answer for you, because like the thing is, if you can't really, again, there are situations that you would just you would say, hey, I want the money to do this X, and so you're selling a story. Some VCs actually like accept it depending on a lot of factors. But the thing that always works is that you should find the thing that works and show it to them with numbers. This always works. The other stuff sometimes works. So if you want some like a good answer as to like focus on this thing, the whole point of it not being deterministic, that's why you don't see that many successful founders. Like, not because they don't work hard, they do. It's just the thing that they thought would get them to get some traction, it just wasn't the thing. So, and that's why back to the time box it for yourself, kind of, so that you don't get burnt on a thing that is just the wrong path and you pivot to something else. That's also very important. Time box it.
We haven't done a question in the back yet, so.
Really liked all the insights. And Farid, you had mentioned that when you're looking to see if a product is fundable, you mainly look at product and the founders, what they bring to the table, and then user traction. Now, how important is the market size that this product solves? And is user revenue, early revenue, like how important is that? Or is just users who love the product enough but aren't paying it?
Yeah, I can take that. Depends on how early you are. We need to have a strong understanding of the market, but it's more about how you're explaining the market to us, and do we believe and have conviction there. Depending on stage, again, having LOIs and early beta tests, I think we take those with a grain of salt. We want to see how they're going, but it's really meaningful when people convert. If folks aren't converting, it's not a good sign. And the further, once you've done a pre-seed and a seed, we are, I think, more and more expecting that real revenue as well.
All right. Another question in the back?
Yeah, you spoke about the value of warm intros earlier on. And I was curious that this seems like a sort of catch-22 potentially. So I'd love maybe you could unpack it a bit. It sounds like, it's good to have someone introduce you to someone they know, and that makes sense. How do you get to the first someone who can make the intro, right? So I guess, if
It
we
is.
get break it down, how do you find the founders who are going to make the intros to the investors?
These things.
And how do you find the investors who aren't the right fit, but who would introduce you to people who are the right fit?
Right. So for the second one, the investors that just are not the right fit, that's just random. You can't plan to get to the wrong investor. That's just a bad plan. So the way to kind of look at it is come to these events, talk to people, you become friends. Some of them may have already invested, have other companies, they may have investors already. They may be able to actually introduce you and to other people, your friends. And yes, it's hard. I can't disagree with you. It's a difficult thing to do.
Okay, we'll have one last question and then we can.
Hey guys, so starting a bunch of companies and hired a lot of people, hundreds of people. I kind of started what you said, Farid, about one thing that make the company fail is the team, right? So I kind of figured that from the beginning that would kind of be the Achilles heel. So talking about co-founders and advisors, right? So my thing is, even though my title is a founder, I think my role is more of a coach, right? Getting people in different positions, right? Getting people in those positions. So one of the guys that's actually the head engineer for who actually built our software, I actually brought him in as an advisor. And these different people actually brought him in as an advisor instead of co-founders because I didn't want to go through the team kind of deteriorating and having all these different issues. So would that make a difference of bringing these people on as advisors or still having them as co-founders?
That's actually a good thing. So it's like a trial period of somebody being on your team and then you deciding that this is a good thing. If it works, it's much better than cold ones to just start as co-founders. Definitely, I would say it's not as good as somebody that you've known forever. Uh, Honestly, if I have to actually say why I've started 3 companies. One of them I'm just starting actually. The only reason the only reason that the other 2 actually worked were because I did them with the friends that these are not actually that close of friend of mine, that these are not people that I would actually just go on trips with normally. Now they are, but back in the day they were not. So these are people that I've known for a long time. I've known them and I could actually have a relationship which is it's built upon years and years. So yes, the better way is doing that. But if that's not available, doing the advisor thing or something of that realm makes sense. Yes.
I think my only question there would be, are they focused and are they incented to spend the time you need to be successful? So that would be my takeaway.
All right, guys, sorry.
Right.
I have to
Farid,
leave.
I
I have to
know
go to the airport. So
Farid has to
you
catch
should
the plane.
continue. Great talking to you guys.
Thank you very
Appreciate it.
much.
Thank you.
I think now's the time to wrap up. Thanks a lot for your time. And Farid, I know you're in a rush. All right. Have a safe flight. And yeah, see you around. All right. Well, thank you. Thank you for the great talk. Thank you guys for coming. And I will pass the mic back to Yasmin.
Well, thank you so much for being here. It was an amazing conversation.